What if I told you that every dollar you earn as a freelancer could be working harder for you? Sounds too good to be true, right? But here's the thing. Most freelancers are leaving money on the table simply because they don't have the right tax strategies in place. Taxes don't have to be scary or confusing. In fact, with a few smart moves, you can keep more of your hard-earned cash and make tax season a breeze. Whether you're a seasoned freelancer or just starting out, this video from Finance 123 is packed with tips that will change the way you think about taxes. Let's dive in and uncover the secrets to keeping more of what you earn. Why freelancers need a tax strategy. Freelancing offers incredible freedom and flexibility, but it also comes with unique financial responsibilities, especially when it comes to taxes. Unlike traditional employees, freelancers don't have the luxury of automatic tax withholdings from their paychecks. This means you're entirely responsible for managing your tax obligations, from setting aside a portion of your income to tracking expenses and filing accurately. Without a solid tax strategy, you could face a hefty tax bill, unexpected penalties, or even cash flow issues that disrupt your business. The key to avoiding these pitfalls is proactive planning. A well-thought-out tax strategy ensures you're prepared for tax season, minimizes your taxable income through legitimate deductions, and helps you avoid surprises. It's not about evading taxes. It's about understanding the system and leveraging it to your advantage. By staying organized, setting aside funds for quarterly taxes, and maximizing deductions, you can keep more of your hard-earned money and focus on growing your freelance business. Think of a tax strategy as your financial safety net. It empowers you to take control of your finances, reduces stress during tax season, and ensures you're compliant with ever-changing tax laws. Whether you're a seasoned freelancer or just starting out, having a plan in place is the first step toward financial stability and long-term success. After all, the more you save on taxes, the more you can invest back into your business or yourself. Track your income and expenses like a pro. Picture this. It's tax season, and you're scrambling to gather receipts and invoices, only to realize you've forgotten to track half of your expenses. Not only is this stressful, but it could also cost you money. That's why meticulous tracking of your income and expenses is the foundation of a solid tax strategy. Every dollar you spend on business-related expenses, whether it's office supplies, software subscriptions, or even that coffee you bought while meeting a client, can potentially lower your taxable income. To stay on top of your finances, leverage tools like QuickBooks, FreshBooks, or even a simple spreadsheet. These tools help you categorize expenses, track income, and generate reports that make tax filing a breeze. The goal is to create a clear, organized record of every financial transaction throughout the year. This not only simplifies tax preparation, but also ensures you don't miss out on valuable deductions. For example, if you work from home, you can deduct a portion of your rent or mortgage as a home office expense. If you use your phone or internet for work, those costs are deductible too. Even small expenses, like mileage for client meetings or professional development courses, can add up to significant savings. The key is consistency. Track every expense as it happens, rather than trying to reconstruct your finances at the end of the year. By staying organized, you'll not only save money, but also gain a clearer understanding of your business's financial health. It's a small investment of time that pays off big when tax season rolls around. Remember, the more detailed your records, the more you can maximize your deductions and keep more of your hard-earned income. The secret to quarterly taxes. One of the biggest surprises for new freelancers is learning that taxes aren't just an annual obligation. They're a quarterly responsibility. Unlike traditional employees who have taxes withheld from each paycheck, freelancers are required to pay estimated taxes 4 times a year. These payments cover income tax as well as self-employment tax, which includes Social Security and Medicare contributions. If you don't pay quarterly taxes or underpay, you could face penalties and interest from the IRS. The good news: managing quarterly taxes doesn't have to be overwhelming. Start by setting aside 25 to 30% of every payment you receive. This percentage accounts for federal and state taxes, as well as self-employment tax. While it might feel like a significant chunk of your income, it's far better to be prepared than to face a massive tax bill and potential penalties at the end of the year. Here's a pro tip to make the process easier. Open a separate bank account specifically for tax savings. Every time you receive payment from a client, transfer the designated percentage into this account. This simple step ensures you won't accidentally spend the money you need for taxes and helps you stay disciplined about setting funds aside. When it's time to make your quarterly payments, you'll already have the money ready to go. The IRS provides Form 1040-ES to help you calculate and submit your estimated taxes, and many freelancers find it helpful to set calendar reminders for the 4 deadlines, typically in April, June, September, and January. By staying on top of quarterly taxes, you'll avoid surprises, reduce stress, and keep your finances on track throughout the year. Unlock the power of deductions. As a freelancer, one of your most powerful tools for reducing your tax burden is leveraging deductions. Deductions lower your taxable income, meaning you pay less in taxes while keeping more of your hard-earned money. The catch? You need to know what qualifies and keep meticulous records to back up your claims. For instance, that morning coffee could be deductible if you're meeting a client or working from a coffee shop. Similarly, expenses like your home office, a portion of rent or utilities, internet and phone bills, software subscriptions, and even travel costs for business meetings can all be written off. Health insurance premiums, professional development courses, and marketing expenses are also common deductions for freelancers. The key to maximizing deductions is organization. Save receipts, invoices, and any documentation that proves the expense was business-related. Use accounting software or apps to categorize and track these expenses throughout the year. This not only simplifies tax filing, but also ensures you don't miss out on potential savings. However, it's crucial to only claim legitimate deductions. The IRS has strict guidelines about what qualifies, and claiming inappropriate deductions can lead to audits or penalties. If you're unsure about what you can deduct, consult a tax professional. They can help you navigate the rules, identify overlooked deductions, and ensure you're compliant with tax laws. By unlocking the power of deductions, you can significantly reduce your taxable income and keep more money in your pocket, all while staying on the right side of the IRS. It's a win-win for your finances and your peace of mind. Why retirement contributions are a game changer. Here's a little-known fact. Contributing to a retirement account can lower your taxable income. As a freelancer, you have options like a SEP IRA or a Solo 400 in ONIC. These accounts allow you to save for the future while reducing the amount of income you're taxed on. Plus, the money you contribute grows tax-free until you retire. It's like getting a bonus for being smart with your money. So if you're not already contributing to a retirement account, now's the time to start. When to hire a tax professional? Let's face it, taxes can be complicated, especially when you're self-employed. If you're not confident about doing your own taxes, it's worth hiring a professional. A good accountant can help you find deductions you might have missed, ensure you're paying the right amount in quarterly taxes, and even save you money in the long run. Think of it as an investment in your financial health. And here's the best part. The cost of hiring a tax professional is often tax deductible. Stay ahead of changing tax laws. Did you know that tax laws change almost every year? As a freelancer, it's your responsibility to stay informed. For example, recent changes might affect how much you can deduct for home office expenses or retirement contributions. Follow reliable sources of information, attend webinars, or join freelancer communities where tax tips are often shared. The more you know, the better equipped you'll be to make smart financial decisions. Plan for the unexpected. Freelancing is full of surprises, some good, some not so good. That's why it's important to have a financial cushion. Set aside some money for emergencies so you're not caught off guard if business slows down or you face unexpected expenses. This will also help you avoid dipping into your tax savings, which can lead to problems down the line. Remember, the goal is to stay in control of your finances, no matter what life throws your way. If you found these tips helpful, don't forget to hit the like button and subscribe to Finance 123 for more financial advice tailored to freelancers and small business owners. We're here to help you navigate the world of finance and make smarter decisions with your money. Thanks for watching, and we'll see you in the next video.